I'm going to show you how to trade with less stress, less time, and be more profitable. Now, most of us in our everyday lives are in the mindset that says that the more hours that you work, the more money that you should be getting paid. And it's this mindset that many take into the financial markets that ultimately results in a whole lot of stress and in some cases a complete destruction of the trading account, resulting in you giving up the trading dream. But successful trading doesn't have to look like this. In fact, I would go as far as to say that once you know what to do and what to look for, the less time that you spend at the trading screens, the more profitable that you're likely to be. Now, let's face it, most of you out there have day jobs, you've got families, you've got other daily commitments that prevent you from sitting at the screens throughout the trading day. So generally what happens is, in such cases, is that when you do have a spare few hours, you log on to your broker platforms and you try to outwit the markets to make a profit. Now, this is extremely difficult, if not impossible, to do on a consistent basis, and it often does result indeed in those losses. So, in this week's video, I want to share with you a high probability day trading strategy that will be less stressful, less time consuming, and if used correctly, will be considerably more profitable. Now, very briefly put, is an end of day trading strategy based on simple price action at key levels of support and resistance. Now, once you know what you're looking for, this strategy will take you less than 10 minutes a day to analyze. That's right, just 10 minutes, that's less stress, and chances are way more profitable. Now, once I've walked through the nuts and bolts on the whiteboard, which I'll do in a minute, I encourage you to download the link below where you can register to get the training videos behind this powerful strategy. That's not all. You'll also be able to access a free tool that we've made available where we will help you find these potential setups at a glance. And all you need to do then is go to the price chart to see if the rules apply. Okay, let's have a quick look at the whiteboard to get to the nuts and bolts. So as we said, this is an end of day strategy. And what we're doing, we're looking for some simple price action setups that are found at key levels of support and resistance. Now, when we get onto the charts in a moment, and of course, when you download the videos, everything will become a lot clearer. But I just want to explain to you exactly what we will be looking for. First of all, we're looking for this type of setup. Now, this is a bullish engulfer. Now, you know from your candlestick analysis that a candlestick shows us quite a lot of information. Here you can see the market opens here, closes lower because it's a red candle with wicks either side. This is a bearish candle. The market is moving down. But what's important about this candle is that the next candle fully engulfs the previous candle. That's why it's an engulfing candle. The next candle is blue. That basically means it was a bullish candle. This is a bullish engulfer. Bullish engulfers at key levels of support can be very high probability turning points. Now, if you look at the bearish engulfer, exactly the same, but the opposite. Here you've got a bullish candle. The market opens here, closes up here. It's a bullish candle because it's blue. The next candle fully engulfs that candle on the way down. This is a bearish candle fully engulfing the previous range of that candle. This is a bearish engulfing candle. Now, when this happens at key levels of resistance, this can signify a really strong probability turning point for the market to head back down. Now, here we have a bearish pin bar and a bullish pin bar. Bearish pin bar, quite simple to follow. Market opens here, then trades all the way back up. So there's big, strong buying momentum taking this market back up to these highs, but then the sellers take control and push the market back down, and we close back down here. This is quite a bearish candle. Seeing these at levels of resistance can indicate a strong turning point for the market to head back down again. Again, here this is the bullish engulfer, same type of thing. Market opens here, trades down, sellers take control, and then the buyers come back into the market and push the market right back up again to close up here. This is a bullish candle. The bulls took control of that time period. When you see these at key levels of support, this can be a good indication that the trend may be turning in the opposite direction back on itself. Now, let's look at the other chart to see exactly where these form on the charts to give you a bit better of an indication of exactly what they mean. Okay, so here you can see we are in a downtrendy market. A couple of red candles coming in here. We hit a level of support indicated by this dotted line here. Market trades through the support with this red candle. Then the next candle fully engulfs that candle but closes higher than that support level. And of course, that would indicate a possible trend direction change for the market to head back up again. Same thing happens. We get into a level of resistance. We break resistance. The next candle fully engulfs the previous candle and trades lower than that resistance level. This is a good indication that this market will be trending back in the direction from which it came, a reversal. And then we have the pin bar. Now, this is the bullish pin bar. Market's trending lower. Market trades lower again and then hits into this level of support indicated by the dotted line. But then the buyers take control, push the market back up again, and we close above that level of support to take us higher. Same with the pin bar at the top here, the bearish pin bar, hit into a level of resistance. Market's taken higher by the buyers, sellers take control, and we close lower than that level of support. Now, this strategy has quite a few little rules that we add on to it. So tell you which setups you should be taking, which ones you should be avoiding, where to place your entries and where to place your stops, of course. And all that is explained to you when you download the videos, which you can do from the bottom of this video. The link is below here. I'll get back onto the screens now and I'll show you this on a real chart so it might become just a little bit that clearer. Okay, so here we are now on a current chart of the Australian dollar against the Japanese yen. This is looking back in history now. So we're looking back in time to see if any of these price formations would have thrown up any opportunities in the past. It's a real-time chart. You can see the price ticking away down there in the bottom right. Straight off the bat, I can see here that this move here from the downside, this downtrend here, comes into this level of support and puts in this nice-looking pin bar here. Now, this pin bar is at level of support. Following our rules, we'd have taken that trade nicely higher as well, giving us a few pips to the upside. This moves up nicely up to the next level of resistance, where we put in this bearish engulfing pattern. Remember from the whiteboard, this is a high probability turning point at levels of resistance, and indeed that worked out very nicely there as well. Not a lot showing in here, I don't think. Bit of consolidation there, then we move back down. Almost put in a bullish engulfer there. Not quite, don't quite engulf, but that would have been a nice little powerful turning point had it been a full engulfer, but not to be. Oh, here we go. There's a nice little pattern there, a couple of pin bars coming into that level of resistance. That would have been an opportunity for us as well. You would have been able to take a good 400 pips out of that one as well. So this is looking back in history. Of course, these ones worked in the past. Not all of them do work, but you can see these are high probability turning points in a market, and you don't need to be spending countless minutes in the day or hours of the day looking at the charts for these setups. Okay, this strategy really is perfect for those that have the busy lifestyles but also want to make an additional income from trading the markets for yourselves or indeed the family. It was a very basic overview, so what you need to do now is click the link below to gain access to all the training videos, and we go through the strategy in much more detail, look at some back testing as well. Then you're going to be well equipped with all you need to know to finally put a stop to bleeding money from your trading accounts and become a profitable trader. As always, if you like my video, give me a thumbs up. If you didn't, give me a thumbs down. Don't forget to leave a comment, subscribe to the channel and Instagram if you haven't already done so. Till the next video, thanks and happy trading.